Okay. Good morning, East Africa. Good morning, FXPesa family. I'm Prudence Maximilian, the education partner here at FXPesa. You are most welcome to today's session of the Market Snapshot series. It's a new year, guys. Happy New Year, happy 2026. So, in this session, guys, we are going to share the insights on what is likely to happen in the markets. We are going to share each and everything that every trader really needs in order for him or her to become a good trader. But remember, everything is sponsored by FXPesa. So if you are here, make sure that you are going to trade with FXPesa. If you are new, you can just open your trading account with FXPesa by using the links that are in the description. But if you are live on TikTok or Instagram, you can use the link on bio to open your trading account. Guys, this is 2026. We are back and we are here to lock in. So in these sessions, we are making sure that at least you get some market insights. You know exactly what is likely to happen in these markets. And by using those insights, they're likely to guide you in one way or the other, at least to make the informed trading decisions. So in today's sessions, guys, as usual, as always in the Market Snapshot series, we are always sharing on what is likely to happen on the side of fundamentals and what is likely to happen on the side of technicals, but also not putting aside sentiments. So in today's sessions, guys, I'm quite very sure that everyone who is here is going to get some insights on what is likely to happen in 2026 on let's say if you're trading crypto, if you're trading assets, commodities, stocks, Forex, and whatever, we are going to discuss together here so that everyone who is here at least can get something from this. So starting with the comments, I can see everyone. Good morning, everybody. Happy New Year, Happy New Year. So starting with the first side of market analysis, guys, we are going to start with fundamentals. What is likely to affect these markets externally? We speak about all external factors that are always affecting these markets. We speak about news. And the good thing about this is that we have the calendars where we can refer. We have the calendars where we can see the news that are likely to affect these markets. But apart from that, also, there are headlines that are going on here and there. I think you heard what happened in Venezuela. And we all know that Venezuela, the big company that produces oil. So also, we are going to touch on that. But apart from that, we are also going to check in the calendar if there is anything which is likely to affect the markets today and see if they are likely to add some volatility in the market, or maybe they are just normal informations. But apart from that, guys, we all know that trading is either buying or selling. You're going to buy or you're going to sell. But you cannot just go and assume that these markets are likely to buy or sell. You must find the reasons. And of course, all together here, we are going to find the reasons. We are going to analyze these markets technically so that you can know exactly what is likely to happen in these markets. So starting with the first side of market analysis, guys, let me display something here, of course, which is the big thing which is happening currently in the world. We all know about Trump and what happened in Venezuela. I think you can see Trump says US is in charge of Venezuela. Maduro expected in court on Monday, of course, which is today. Okay, what to know about U.S. military attack on Venezuela? Former Venezuela President Nicolas Maduro and his wife were captured and brought to the U.S. They will appear in federal court at noon on Monday, which is today, according to the spokesperson of the U.S. District Court in the Southern District of New York. Of course, everyone is speaking about this, but we as traders, how does this affect the markets? Specifically for those people who are trading oil, US oil, UK oil, or anything related to oil, there is something which is likely to happen because of the news which are going on here. And apart from that, guys, we heard Trump speaking about the US companies to invest billions in the restoration of oil sector in Venezuela. So it was not just the attack, but also they're thinking about investing in the oil industry in Venezuela. So for anyone who is thinking about trading oil, and now these are my views, there is a very big possibility of that if the US invests in Venezuela billions of US dollars, of course, in the oil sector, there is a very big possibility of us experiencing a little bit of prices of oil going a little bit down, you see, because if they put everything there, they put money there, they invest it there, there is a very big possibility of course, oil production to be smooth and easy, and that can lead on easily availability of oil, so that can lead to the drop of oil prices. Of course, this is what is happening in the US and Venezuela. But apart from that, speaking about fundamentals, we speak about all external factors that are always affecting these markets. We speak about social, economic, and political factors that are always affecting these markets. From what you saw, or what is happening in the US and Venezuela, it's all about political, but also economic. You see, because it is touching directly to the oil which is present in Venezuela. But apart from that, we have other information that are likely to affect the markets specifically today. And when we speak about fundamental analysis, we analyze social, economic, and political factors that are likely to affect these markets that are trading. And of course, today is Monday, January 5th. We just have a single information which is likely to affect the markets today. And of course, it is going to come out at 5 p.m. Sorry. Okay, excuse me, I have a little bit of flu. Okay, so let us continue with what we are speaking about. We are speaking about all external factors that are likely to affect the markets. We as traders, we don't just assume and buy or sell. We have to find reasons. And of course, there are some reasons which are always adding some volatility in the market. And now we speak about all these external factors that once their data are released, they're always affecting these markets that we're trading. And as I've said, that the good thing about this, we have the calendars where you can refer and where you can see the exactly date, the exactly time, the currency which is going to be affected, the impact expected from that information, but also if you want to see on how that information did it previously, all the data are present. And of course, you can just use the Forex Factory. It's very easy and user friendly. Today is Monday, January 15th. January 5th. And of course, we just have a single information here, and it's going to come out at 5 p.m. East African time. And this is going to affect the US dollar. And the impact expected from this, of course, it's high. And this is the ISM manufacturing PMI. Sorry. Okay, the source of this, of course, it is coming from the Institute of Supply Management, and it measures the level of diffusion index based on the surveyed purchasing managers in the manufacturing industry. And the effect from this, actual greater than forecast, is good for the currency. And the next release is going, of course, this information is always being released monthly on the first business day after the month end. And of course, the next release is going to be on February 2nd. The effect from this, actual greater than forecast, is good for the currency. So when we speak about actual greater than forecast, we always refer to these numbers, the previous information or the previous data and what they are forecasting. Actual greater than forecast is good for the currency. Previously, it came out as 48.2, and they're expecting this to be 48.3. So if it comes greater than 48.3, then that's good for the currency. So we are going to expect a bullish USD. But if it comes less than 48.23, then that's bad for the currency. So we can expect bearish USD. So I think you can see on the same time, we are also going to have the second information, and this is ISM manufacturing price. Of course, it is from the same source, the Institute for Supply Management. It measures the level of diffusion index based on the surveyed purchasing managers in the in the manufacturing industry. The effect from this, actual greater than forecast, is good for the currency. Released monthly on the first business day after the month end, and of course, the next release is going to be on February 2nd, 2026. Okay, there is a note here that this is the component of PMI, but reported separately as an inflation gauge. Above 50.0 indicates rising prices, below indicates falling prices. So actual greater than forecast is good for the currency. And as you can see here, the information is showing us that previously it was 58.5, but they're expecting this to be 59, to increase to 59.0. So actual greater than forecast is good for the currency. If it comes greater than 59, then that's good for the currency. We are going to expect a bullish USD. But if it comes less than 59, then that's bad for the currency. We are going to experience a bearish USD. So far in the calendar, we don't have much. You see, we just have this one. There's a single information, and this is about ISM manufacturing PMI, and it is going to affect the US dollar. Of course, the effect from this is high. The impact expected is high. So if you're a trader looking for to trade today, remember that all these external factors are always moving the markets. They're always causing those spikes that you see here and there within a fraction of a second. So if you're a trader looking for to trade this, maybe there are people who are fundamental traders, the people who are always taking advantage of these movements, but there are people who are not fundamental traders. They don't involve themselves in trading news. So you as a trader, you have these options. You see the exactly time. If you're in the market at that time, make sure that you have secured your positions. You have secured your capital. So make sure that all your your open positions have the stop loss. But apart from that, there are those people who want to take advantage of those that volatility which is being caused by the release of these informations. This is the time. So if you are going to trade, then you have to know exactly how much you are risking and how much you are anticipating to get you as a trader. So on the side of fundamentals, guys, there is nothing much. Maybe tomorrow, even tomorrow, nothing more. So if you're going to trade today, you're going to trade under normal market conditions. And if you're going to trade under normal market conditions, it means that you have to analyze the charts. You have to analyze the charts. So it's January, we are back, and I'm quite very sure that everyone has got his own stuffs in his or her watching list. So feel free to write for me on the comment which currency pairs do you want us to analyze here and share the insights. Which commodities do you want us to analyze here and share the insights, so that we can share whatever you really want to see here. Guys, remember, everything is sponsored by FXPesa. So if you're here and you're just getting started, you can open your trading account with FXPesa by using the link on the description. If you're live on Instagram, you can just use the link on bio. Okay, kindly angalia Euro USD. Ukifika kwa technical analysis, kaka, happy new year. This is Kevin Kimuyu. Okay, so we are going to start with Euro USD, and this is how we do it. Okay, so let us start with Euro USD. And of course, everything that I'm going to share here, they are just for education purpose. Before you make any trading decision, make sure that you have confirmed more, make sure that you have added more confluences on that so that you can make the right trading decision. So specifically, I'm going to analyze Euro USD as a day trader. Euro USD as a day trader. Though we are going to see the general direction of these markets on how these markets are doing, but I'm going to analyze this as a day trader. We have something called top-down analysis when analyzing these charts. Technically, you have to analyze these charts starting from the higher time frames, going to the lower time frames. And why higher time frames? In the higher time frames, you are going to see the general direction of these markets. So if the market is bullish, you are going to see it clearly. If the market is bearish, you are going to see it clearly. But if the market is just consolidating, you are just going to see it clearly. So starting from the monthly time frame, at least you as a day trader, you can know exactly where these markets are heading to. For 2025, we had a bullish Euro USD. We experienced a very, very weak US dollar. So anyone trading, let's say Euro USD, GBP USD, Gold USD, we had a bullish market last year. Will that bullish rally continue for this year? So we have to analyze technical here and see what is likely to happen. So though numbers dates have changed, but as I can see here, the trends are still the same. You see, the trends are still the same. Let's say, for example, for those people who know about chart patterns, you can see how Euro USD from the higher time frames is creating for us a continuation chart pattern. And of course, this is a triangle. I think everyone can see it clearly here. You see, so there is a very big possibility of this market after breaking that triangle to continue with its bullish rally. So this is the general information on what is likely to happen if this market continues pushing upward that way, you see. So that can be a general information for this year, maybe for 2026. Then you can express this market continuing, having a bullish rally, maybe continue pushing upward, reaching at least these levels here, starting with 1.2362. Maybe later, also this market can reach this level here, around this area, and something like that. So that's the general information on what is likely to happen on USD for this year. But remember, we want to analyze the charts today and see if this market is giving us a bullish opportunity or if this market is giving us a bearish opportunity. So guys, generally, this market was bullish starting from January 2025. But as you can see, when the market reached around this area, you can see that this market is started a little bit of consolidating for almost 1, 2, 3, 4, 5, 6, 7, 8 months. This market was just ranging between these levels here, you see. So we are still in the same range. So we have to go and see exactly what is happening around this area. But remember, you as a day trader, you as a trader, you must have a target, you see. Let's say if you're a day trader, I always recommend people here that if you are going to trade these major and minor currency pairs, let your target not exceed maybe 100 pips. Because let's say, for example, if you are trading USD, or if you are trading GBP USD, or if you are trading these major and minor currency pairs, there is a very big possibility of you attaining that goal, because 100 pips, they're not that much. But if you come here, you as a day trader, looking forward to trade, and then you're anticipating to get, let's say, 600 pips, or let's say 500 pips per day, you're likely not to get them, you see. So you must have the realistic goal. So let's say, for example, we're analyzing USD, and let our target be 100 pips, you see. Let our target be 100 pips. So generally, as you can see here, the market was bullish, but for the past 1, 2, 3, 4, 5, 6, 7 months, the market was just consolidating around this area. So now, in order for us to know exactly what is going on here, we have to start doing our top-down analysis from the higher time frames going to the lower time frames. Now, from the monthly time frame, we just go to the weekly time frame and see exactly what was happening. I think you can see we had clear bullish characteristics where the market was creating clear high highs and high lows, high highs and high lows, breaking structures going upward, high highs and high lows. But when the market reached around this area, I think you can see it failed to continue creating those high highs and high lows, and this market had a little bit of consolidations around this area. It failed to break that area. I think you can see. But apart from that, I also want to mark something here, this area here, and I want to mark it as a zone because the market also failed to break this zone for a long time. So where the market is currently, it's on the area where sellers are likely to enter, because we always see the history by looking at these charts. The market once started on this area, we had a sell-off starting from there. But not only there, the market also touched on the same area. We had a sell-off starting from there. And where the market is currently is on the same area where we are likely to see sellers entering. You see, where we are likely to see sellers entering around this area here. You see, where we're likely to see sellers entering around this area here. So generally, that's where the market is currently. But remember, if you're a day trader looking for to get your 100 pips, your 100 pips are just on a very small portion of this market. Just a bearish move from here going down up to here, these are more than 100 pips. Or if you get a bullish movement, the movement from here up to somewhere here, these are more than 100 pips. So generally, you as a day trader, you have to focus much where the market is currently around this area. You see, around this area. Guys, remember, this is the weekly time frame. The movement from here going upward, it took more than a month. 1, 2, 3, 4, 5, almost 1, 2, 3, 4. We had a bullish move, but from what I see here, there is a very big possibility of us finding those buyers who are pushing this market failing, and then we can see sellers trying to push this market down. That's the general information on what is likely to happen on Euro USD. Now, you as a day trader looking forward to trade here, looking forward to get your 100 pips, at least you have to know exactly what is going on, where the market is currently. Let me mark this area here. I'm marking this area as my demarcation. If the market continues pushing down, then this can be your target. And of course, from there, you can just go to the daily time frame and focus much on this area. Remember, this was the bullish rally. This was the bullish run. The market was pushing up, and then now we have to find the market creating bullish characteristics, which are clear high highs and high lows. And where the market is currently is on the zone. We have to find those bullish characteristics coming to an end. And then if sellers are entering, we are going to see it clearly around that area. So from there, we just go to the daily time frame and focus much on the area where the market is currently. And this is what I'm speaking about. I think you can see clearly that this market was creating clear bullish characteristics. I think you can see high, this is low, this is high, this is high low, this is high, and this is high low, and this is high. I think you can see the market has failed to continue creating those highs and pushing upward. I think you can see this market pushed a little bit down, indicating that where the market has reached is the area where sellers find these areas, or prices, very attractive for them to enter their sell trades. I think you can see on the same area, the market once started there, we had a sell-off of more than 300 pips going down. Not only there, but I think you can see also on this area, the market once started on this area, we had a sell-off of more than 400 pips almost, you see. Not only there, but I think you can see on the same area, the market once touched, and then we had the sell-off of like 250 pips, you see. Not only there, I think you can see where the market is currently is on a potential area for sellers. That's why you can see sellers have already reacted around this area for more than 100 pips going down. You see, for more than 100 pips going down. Why did I mark this area here? Why did I mark this area here? Why did I mark this area here? Guys, the market might be bullish, the market might be bearish, but if you don't have the right timing, you might lose your money, you see. So you as a trader, you have to know exactly on how to trade a bullish market. You have to know exactly on how to trade a bearish market. And how are you going to know that? You're going to know that by understanding the characteristics that are building a bullish trend, and by understanding the characteristics that are building a bearish trend. Let's say, for example, if the market is pushing upward, it has to be breaking structures going upward like this. You see, this indicates that buyers have much power compared to the sellers who are present. And if the market is bearish, if the market is dominated by sellers, you have to see the market breaking structures going down. This indicates that the power of sellers is much compared to the power of buyers who are present. So now here we have to look at it closely. As you can see, the market created high, created low, created high, created high low, coming back to reach as a previous high. The market created high, it came back here. I think you can see this was our last low. You see, and the market broke that area, this area here. So this indicates that the selling pressure is available. See, this indicates that Euro USD right now, sellers are trying to enter. You see, that's why you can see this sell off here. But where the market is currently here is on the zone. And of course, this zone, as you can see, the market was rejecting on this zone, rejecting on this zone. So the market wants to break that zone. It's like it has never came back to retest on this zone. So there is a very big possibility where the market is currently for us, at least to get those bullish moves. You see, bullish moves. Starting from there, if you are, let's say, anticipating to get your 100 pips, there is a very big possibility of you getting those 100 pips by just having a very minute movement starting from there. So guys, remember, that's the general information. You as a trader, you won't trade generally. You have to know exactly what is happening. You have to know exactly if buyers have entered. You have to know exactly if these selling pressures come to an end. And how are you going to see that? Is by going to the lower time frames. These are sellers trying to push this market down. And of course, even if it is just a normal retracement, but these are sellers trying to push this market down. And if a sellers trying to push this market down, you won't fight them. You have to see if their powers come to an end, and then it's when you can think about, let's say, entering your buy trades. But otherwise, you won't stop this market. You can wonder this market pushing back this way. You see. So if you want to trade, you have to know exactly what you are looking for. So from the daily, we just go to the 4 time frame and focus much on this area here. You see, and focus much on this area here. I think you can see clearly that the market was failing to break this zone here. It was failing to break this zone here. The market was injecting all the time, rejecting. But once the market broke that area, it has never come back to retest on this area. So from what I see, there is a very big possibility of us experiencing or getting a bullish Euro USD today. A bullish Euro USD today. So we have to see if there are, if buyers are, buyers are rejecting around this area. As we go to the 1 hour time frame, we have to see those rejection candles around that area. We have to see them. Of course, these sellers were pushing this market down, but as I can see, buyers are trying to enter. So for the last 1, 2, 3, 4, 5, 6 hours, buyers have dominated for 5 hours. So there is a very big possibility of us seeing buyers pushing this market upward. Now, how can you confirm this? You have to go to the lower time frame, specifically the 15 minutes time frame. And you're going to focus on this minute movement here, the movement of sellers which are pushing this market going down. We have to see that movement coming to an end. And if sellers were pushing this market down, so it means that as you go to the lower time frame, specifically the 15 minutes time frame, you are going to find this market creating clear low lows and low highs, something like this, low lows and low highs. But if the power of sellers comes to an end, you will find that market failing to continue creating those low lows and low highs, then that market will start creating clear highs and high lows. And if you find this scenario around this area, that shows you that now buyers are pushing that market upward. So from there, we just go to the 15 minutes time frame and focus much on that area. I think you can see the market was pushing down, correcting, pushing down, correcting, pushing down, correcting. But currently, I think you can see this market has started showing us the bullish characteristics. This is high, this is low, this is high, this is low, this is high, this is low, this is high. So there is a very big possibility of this market starting pushing that way. So that's what I see generally on Euro USD. That's what I see generally on Euro USD. Okay. USD JPY. Okay, that's what I see generally on Euro USD. Let's go and check on what is likely to happen or what is going on USD JPY. USD JPY. Okay, of course, as I've told you that you as a trader, you won't just conclude or you won't just make your trading decision by just basing on the lower time frames. You have to see generally what is happening on the higher time frames, because that's why you're going to see the general direction of this market. As you can see here, USD JPY, generally this market is bullish. This market is bullish because, as you can see, for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 months, we just had a single bearish month, and this was August last year. You see, so this indicates that this market is dominated by buyers, and if this market is dominated by buyers, we as traders, we have to know the characteristics that are building a bullish market. And the bullish market is when the market is breaking structures going upward, indicating that the power of buyers is bigger compared to the power of sellers who are present in the market. But generally, you as a trader, you can just start it from here, let's say up to somewhere here where the market is heading, but not only there, maybe up to somewhere here. Let me mark these areas so that you can know exactly what is happening. So as you can see, USD JPY is always trending. You see, USD JPY is always trending. So let's say, for example, starting from 2012, you can see the market had a little bit of bullish rally. The market corrected, bullish rally. We had a bearish move. The market had a little bit of consolidation, though the bearish consolidation. Then we had a bullish rally. The market came back, bullish rally. For last year, for the first 4 months, we had a very huge bearish move on USD JPY. I think you can see starting from here, this was January. For the first 4 months, 1, 2, 3, 4 months, we had a very huge bearish move or bearish rally where the market moved over almost 2,000 pips. But for the last months of 2025, all those pips were recovered. You see, the market moved over 2,000 pips going upward. So right now we are in a bullish market. But remember, the market might be bullish, but if you don't have the right timing and go to buy where the market is likely to give you the buying opportunities, you are likely to lose money. You see, so you have to know exactly where the market is currently. Let me mark this zone, because it's the zone that once the market touched on that zone, it caused a sell-off of more than 2,000 pips. So you cannot just ignore that zone. But not only there, if the market continues with its bullish rally, there is a very big possibility of this market touching around this area. Let me mark it as a zone, because also that zone, once the market touched on that area, it was on July 2024, the market had a sell-off of more than 2,000 pips. So generally, we are in a bullish USD JPY right now. You see, now we have to see the bullish characteristics. And of course, the bullish characteristics is when the market is breaking structures going upward. You have to see that market creating those clear high highs and high lows, breaking structures and going upward. Then that's what indicates a bullish market. You see, that's what indicates a bullish market. Let me mark these zones, and then now from there we just go to the weekly time frame so that you can see exactly what is happening on USD JPY. See, so that you can see exactly what is happening on USD JPY. This is what I was talking about. Starting from, let's say, this was April last year, the market started its bullish rally starting from here. But we can just condense this and start analyzing our charts starting from this area here, going upward at least to where the market is currently. You see, where we had a bullish move. Now, in order for us to see exactly the good market structures, in order for us to see those high highs and high lows clearly, we have to go to the daily time frame. That's where we are going to see those clear high highs and high lows. But though, let me mark this area. Let me mark this area because it caused the buyers to enter so it can give us something as we go to the lower time frame, because that's where the market is currently. Guys, bear in mind, if you're a day trader looking for to trade, let's say your target shouldn't exceed, let's say 100 pips. And our 100 pips, if the market gives us the selling opportunity, the moment from there up to here, these are more than 100 pips. Or if it gives us the bullish opportunity, then the moment from there up to here, these are more than 100 pips. So we are still in the range, you see. Now from there, we just go to the daily time frame. And on a daily time frame, that's where you're going to see these market structures clearly. That's where you're going to see these market structures clearly. I think you can see starting from here, this market was giving us clear highs and high lows, coming back to retest, consolidating, breaking consolidation, the market continuing pushing clear highs and high lows, consolidating, the market breaking those consolidations, continuing creating those bullish characteristics, showing you that the power of buyers is much stronger compared to the power of sellers who are present. I think you can see the market created high, created low, created high, created low, and this was high and this was low. And then now from there, the market created high, this was low, this was high, and the market was on its low. I think you can see the market is a little bit consolidating around this area, failing to break this zone because this is a very, very strong zone. Very, very strong zone. The market once touched on this zone, we saw this market pushing down over 2,000 pips, you see. So that's why you see that market rejecting around that area. The market once started on those same areas, we saw this market selling over 800 pips. So that's why you can see the market is trying to gain momentum, so that if it breaks that area, then its bullish rally can continue that way, you see, that way. But from where the market is currently, guys, the market is on the zone, and on this zone, the market has already retested that zone for some days. I think you can see it started on this area, the market pushing down over 300 pips. It came back again, it touched on that area, it pushed it down over 250 pips. It touched again on that area. I think you can see the market push it down over 200 pips. It's almost on the same area. There is a very big possibility of this market rejecting again. You see, there is a very big possibility of this market rejecting again. Now, how are you going to see that? You as a trader, you as a day trader, you have to focus much on this area where the market is currently. Though it's like the market is consolidating around this zone, but you as a day trader, at least you can see exactly what is happening around this area. You see, remember, if you're a day trader, your 100 pips are just here. The moment from here up to here, these are more than 100 pips. Or the moment from here up to here, these are more than 100 pips. So it is still in your range. You can trade this market. You see. So from there, let's go to the 4-hour time frame and see what is happening around that area. I think you can see the market sold, it touched on this area. We had a bullish rally, bearish rally, bullish rally. The market came back on that area. So there is a very big possibility from where the market is currently on USD JPY, at least to have a little bit of selling around that area. You see? So that's the general information on what is likely to happen on on USD JPY. So I have to see if sellers have entered around this area. I have to see rejecting candles. I have to see candlesticks around this zone, because you won't just command this market that you have to sell here. This market can just push and continue pushing upward. Now, you have to sell if you see sellers entering. And how are you going to see that? You just go to the 1-hour time frame and see if they are rejecting candles around that area. I think you can see the market was creating clear highs and high lows, highs and high lows, highs and high lows. Starting from here, the market started violating bullish characteristics. I think you can see the market broke that area. These people were here, were liquidated around this area. You see, we are liquidated. The market touched on this zone, the very, very strong zone around that area. And then now from there, I think you can see we had a little bit of selling. You see, selling. This shows you that there are sellers around this area. So if this market gives you premium prices, we are likely to push this market down, going down that way. See? So that's what I clearly see on on USD JPY. That's what I clearly see on USD JPY. I think you can see this bullish movement has come to an end. It started from here. You see, the market consolidated. It showed us that sellers are here. Market came back around this area. Of course, this was the liquidity area. That's why the market liquidated around this area. And then from here, you can see the market has already started giving us bearish characteristics. This is low, this is high, this is lower low. If it gives you premium price, which is lower high, then from there you can think about going short on the USD JPY. That's what I see generally on USD JPY. Okay, guys, I want to remind you that everything which you see here is sponsored by FXPesa. So if you are new or if you are just getting started, you can open your trading account with FXPesa, and of course there is 100% bonus on your first deposit. So you can take advantage of this, fund a new account, and get 100% bonus credit on your first deposit. So you can take advantage of this, guys. 2026 is here. We are locking. So you have to be in so that you can get all these advantages. But apart from that, guys, let's see what is likely to happen on GBP USD. GBP USD. Okay, so as usual, guys, starting from the higher time frames, going to the lower time frames. And why higher time frames? I've told you here that you have to see, or you have to know, the general direction of that market. So for last year, GBP had a bullish rally. GBP USD had a bullish rally. I think everyone can see here, but from the higher time frames, at least we can mark the areas that can play out as our potential areas as we go to the lower time frames. For the first 1, 2, 3, 4, 5, 6 months, we had a very huge bullish rally on GBP USD for 2025. I think you can see. But for the last 6 months, you can see we had a little bit of selling pressure where the market failed to continue having a bullish rally. We saw this market giving us this very nice bearish engulfing, showing us that there is a selling pressure. So for the last 6 months, 1, 2, 3, 4, 5, 6, almost 7 months, this market had a bearish move where we had over 800 pips of this market pushing down. So we're in the market where sellers took over for almost 6 months, you see. So you have to know exactly where you are dealing with, you see, or what you are dealing with. So GBP USD generally had a bearish move for the past 6 months. Sorry. Okay, so let us proceed with this. So what I was speaking about is that from the higher time frames, you will know exactly what the markets are doing, you see. So for the past 6 months of the last year, we experienced the bearish move around this. The market moved over 800 pips. So from there, you have to go and see what is happening around that area. Of course, we had a bullish move, so we are going to find this market creating clear highs and high lows, and from here we have to find this market at least having a bearish move, creating low lows and low highs. Now from there, you can just go to the weekly time frame, and you are going to see that clearly. So I think you can see the market had a bullish rally. It was creating these clear highs and high lows. From here, I think you can see these were clear highs and high lows. Clear highs and high lows, and the market rejected, showed us that sellers are present. Now from there, these were our last 6 months of this year, of last year. So we have to spot out our potential areas, the areas that can give us trading opportunities, either selling opportunities or buying opportunities. I've spotted out this area because I think you can see the market rejected on this area for almost 1, 2, 3, 4, 5 weeks. You see, it's when the market broke that area. But when the market came back inside here, you can see the market came to retest on this same area for 1, 2, 3, 4, 5, 6, 7, 8, 9. A lot of weeks the market was failing to break that area. So on the same area where the market is currently, on the same area where the market rejected for a long time, in the same area where the market is currently. So there is a very big possibility of us experiencing a little bit of rejection around that area. You see, and if the market rejects around that area, where can we put our target? Let me put my target around this area here. You see, around that area here, there. Then you can know exactly what is happening. So guys, bear in mind, this market had a bullish move for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. The market was pushing upward. So as we go to the lower time frames, we are going to find this market creating clear high highs and high lows, something like this. You see, and where the market is currently here, it's on the zone where the history is showing us that this area, always sellers are always entering. You see, I think you can see the market was rejected around this area, the market rejected around this area, the market rejected around that area, and that's where the market is currently. We have to see sellers rejecting around that area. And now, in order for us to confirm that sellers have entered, we have to find that this bullish rally coming to an end, and then we have to find this market at least trying to show us that sellers have much power. Then we can think about going short on GBP USD. Though generally for the last 6 months, this market has showed us, the bearish characteristic that sellers have much power compared to the buyers who are present starting from January to June, then June to December. This market had a little bit of selling around that area. So from here, we just go to the daily time frame, and that's where we are going to see those clear market structures indicating that buyers were pushing this market upward. I think you can see clearly that this on this area that the market failed to break this zone around this area where the market was pushing down. I think you can see low, low, high, low, 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 high, low, 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 high, low, low. But once the market touched on this area, you can see it failed to continue creating low lows and low highs, and then the market started showing us the bullish characteristics where the market started breaking structures going upward, indicating that buyers are dominant. You see, so we can see clearly that this market created something like this. This is high, this is low, this is high, high, this is high, low, this is high, high, this is high, low, this is high, high, this is high, low, this is high, high, and the market came back to retest around this area. Where the market is currently, there is a very big possibility of this market giving us a little bit of bullish characteristic. You see, because generally, though the market has reached on the zone, where once the market touched, we saw this market selling off over, let me check, over 600 pips. The market touched on that the same area. Then we saw this market rejecting over 200 pips. On the same area, the market rejected over 500 pips, almost 500 pips. On the same area, the market once rejected over 200 pips. So this is the very, very strong zone. That's why you can see that the market rejected also over 160 something pips. But where the market is currently, let me zoom this in. You are going to see clearly that this market is creating clear high highs and high lows, 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 high highs, and this was clear high low, and this was clear high low. And if it was clear high low, then the most probable opportunity which is present here on GBP USD right now is the opportunity of having a bullish move like that. And guys, remember, if you're a day trader looking forward to trade, just the movement from here up to here, these are more than 100 pips, you see. So you are getting your target without even affecting the trend of the market, even without affecting the trend of that market. Let me do something here. Let's say, for example, there are people who are always trading by adding some more confluences. Let's say those people are always using Fibonacci retracement. Even if you apply your Fib tool starting from here to here, the market has already retested over 50 50 to 60% around this area. So there is a very big possibility of this market giving us premium prices, at least pushing a little bit upward up to here. Then once the market touches on this area, obvious, we are going to see this market rejecting again. You see, rejecting again, because it is a very, very, very strong zone around that area. So now we have to see exactly what is happening around this area so that we can see if the market has already rejected or if buyers have already entered. You're going to see that as you go to the 4-hour time frame. At least you can see that from here. You see, these are areas of interest. I think you can see the market consolidated a lot here, but it broke that area. Of course, the market left a fair value gap around this area when the market was pushing. I think you can see this candle here came back to clear that market imbalance, and you can see a lot of rejections around that area. There is a very big possibility from where the market is currently, at least buyers pushing this market upward that way. So that's what I see generally on GBP USD. Generally on GBP USD, I think you can see how this market has a very, very clear bullish trend. You see, a very, very clear bullish trend. Though the market has approached on the area where once the market touches on this area, we see this market selling. Touches on that area, we see that market selling. Touching on that area, we see that market selling. So before I can conclude this, I just want to remind you that with FXPesa, you can access a lot of education materials. We have a lot on our YouTube. We have the Novice to Pro series, which is in Swahili. So for those people who speak Swahili, we have the Swahili version of the Novice to Pro series. But apart from that, also we have Beginner's Guide, which is in English, but also we have the Intermediate and the Pro, of course, the guide, which is also in English. So you can take advantage of these guys. Don't forget to subscribe. Make sure you subscribe so that you can get all the updates that are always coming here. And of course, we always have these live market snapshots daily, Monday to Friday. So you can take advantage of these guys so that you can learn and of course trade with the best. But apart from that, I also want to remind everyone who is in Kampala, Uganda, but also who is in Dar es Salaam, Tanzania. 2026 is here. We have the physical presence in those cities. So you can take advantage of that. Go and meet with the traders. Go and create a very big trading community in Kampala and in Dar es Salaam. Go and learn from experts who are present there. And remember, everything is fully sponsored by FXPesa. So you have to take advantage of this and learn from the best. But apart from that, guys, I also want to remind you that we have different podcasts here. We have the Bullish Banter podcast, very special for trading insights. But apart from that, we have the Financially Incorrect, which is fully sponsored by FXPesa, where you can learn from successful people. So, guys, we are going to meet a lot here. Remember, we are starting this year very, very strong. We are locked in. So, guys, what I can just tell you that choose FXPesa and choose the best and just trade. Thank you so much for your time and have a blessed morning. I'm signing out. My name is Prudence Maximilian. Of course, call me Kaka Wataifa. Peace and love. Bye-bye.